First, you start.
Good evening, everyone. Thank you all for joining us today for an insightful and engaging webinar on corporate social responsibility, navigating organizational challenges and addressing limitations. So we are thrilled to have such a distinguished group of attendees with us. So to begin, I welcome our chairman of the committee, C. Dr. Debashish Mitra sir, past president to ICI, and also chairman to the expert advisory committee. Along with him, we have an eminent speaker with us for today's webinar, Dr. Bhaskar Chatterjee sir. We are grateful for your participation and expertise, which will undoubtedly enrich our discussion today. So now I invite Chairman sir to share an insight on the topic through his keynote address. Over to Chairman sir.
Thank you very much, Secretary of this committee, and all the others of the CLCGC committee who are present here. To Dr. Bhaskar Chatterjee, thank you very much for joining us. He has been a friend of the Institute of Chartered Accountants of India. And ladies and gentlemen, my Chartered Accountants friends who are listening to me, a very, very good evening to all of you. You see, Section 135 of the Companies Act, that is a section which deals with CSR. Right, when it was introduced in the Companies Act 2013, we all had this thing, we did not take it very seriously because the penal provisions did not come into effect. And at that time, it was basically explain why you did not spend 2% of your average net profits of the past 3 years on CSR. Right, so those were the early days. We did not take a lot of notice to that section. But now, what has happened? The penal provisions have been brought into effect, and now a lot of this register of companies, they're issuing notices for non-compliance with CSR. Even if you make a delay in transferring unspent CSR amount to the bank account, they're also sending notices. So you see, we have a situation now where CSR is being very strictly regulated by the register of companies. And at the Institute, let me tell you, we have taken Section 135 of the Companies Act very, very seriously right from its inception. Those of us who follow or read of the Institute publications, we have two publications on CSR. One is the accounting for CSR, how to account. Suppose you have, pre-spent CSR. Should I take that as an asset, or should I charge it off to the PL? How do I do that? Right? Then we have one more publication on audit for CSR. Suppose you have to do a CSR audit. What kind of report you should sign for the CSR audit? Even though CSR audit is not mandatory as such, but suppose somebody says that, can you have a CSR audit done to ensure compliance? Right, so we have got these two publications. Today, the one on accounting for CSR. These publications, we had a meeting of the Corporate Law and Corporate Governance Committee today, and we have decided to update that publication. There are certain accounting entries there, and we are seeking also the view of the Accounting Standards Board of the Institute to find out whether all the accounting entries that are there or not, are correct or not. So those of us who are dealing or dabbling with CSR, please go through these two publications. The first one on the audit, there is not much of a change, but on the accounting, maybe we'll make some small changes there. So this is as long as the Institute publications are concerned. Now, the Institute also runs a 7-day certificate course on CSR. We are going to have the 7th batch of that course. It does not cost you much, 5,000 plus GST, right? That's the amount? 5,500 plus GST, right? And 7-day course. And let me tell you, some of the best faculties in the country, they teach you on CSR. Our next batch is starting on the 7th of September. 12th of September. Our next batch is starting on the 12th of September. I would request all of you, if you have the time, please join the batch. I know this is a tax audit season, tough one. But if you have the time, do join this certificate course that you are having on the CSR. Let me tell you, I've seen the background material. I believe that the background material is one of the best that is there in the market. Have a look at it and join this course. I'm sure, if you spend 7 days with us with this course, your understanding of CSR will be much, much better than what it was before you joined the course. But today, most important is, Dr. Bhaskar Chatterjee. Let me speak a few words about him. When CSR came into being, I still recall that he was the one, who always advocated CSR. Many people, they look up to him as one of the pioneer drivers of this whole CSR provisions. right? So you see, we have him as a speaker today. And let me tell you, we are extremely happy and privileged to have him. And I'm sure you will find his presentation to be of great benefit to you, which will enhance your learning about the subject, which will enhance your understanding and insight on the subject. So, with these words, once again, you see, thank you for being present with us this evening. And I wish all of you a very, very happy learning. Thank you very much.
Thank you, sir, for sharing your knowledge and having a walkthrough through the requirements of the CSR in an organization. Now, it is a great anticipation that I would introduce our eminent speaker for today's webinar, Dr. Bhaskar Chatterjee, sir, a renowned expert in CSR. And he's having widely, that acclaimed management, he's a management practitioner, theorist, and a teacher. So we are excited to hear his perspective and the insight today. So with this, I would like to welcome Dr. Bhaskar Chatterjee, sir. Over to sir.
Right. So thank you very much, Mr. Mitra. Such a pleasure and a delight to be here with all of you. Thank you for those very kind words of introduction. I am very, very happy to know that ICAI has taken such a good, strong leadership on the aspect of CSR. I'm sure that your two publications on accounting for CSR and auditing for CSR are going to be booklets of high standard and people will read them with great interest. In fact, I will ask Seema to send me copies so that I too can have a look at them. Uh, Many of us in the CSR field don't actually approach it from the accountancy and audit angle, but I know how important it is. Most companies today who are in the CSR domain almost always now get their CSR accounts prepared and audited for the simple reason that, as you rightly said, compliance has become very, very strong. I sit on the board and the chairman of the CSR committee of several boards. Let me tell you that as the chairman of the CSR committee, many of those notices are sent to me by name. I think that I'm the guy who put it all together, and here am I receiving notices. So all of us have to be very alert, and in a way, it's also good. So in the course of my talk, what I will do is that I will not presume any knowledge on the part of any of my audience. I am delighted, all members of the audience who are with me here today. I'm extremely grateful that you have joined this session. I will try to make sure that the time you spend with me will be spent in a worthwhile manner. I will start at the beginning and then take you through. Seema, in her usual meticulous way, has sent me about 8 questions which came along. So I have also kept them at the back of the mind. Many of the issues that have been raised in those questions, I will address from the very beginning in terms of accountability, in terms of transparency, in terms of what needs to be done, and to accept the fact that this CSR law is primarily a spending law. It is not something that if you budget for or provision for or account for, then it is enough. Or transfer that money into an NGO account. These are not sufficient. End of the day, it is a spending law. Have you spent the money? Yes or no is the only criteria which allows compliance. Having said that, let me now begin with my presentation. And if I would request Seema to start with slide number 1.
Just give me a moment, sir.
Sure. Yes, it is. Did I send you this one?
This was the one earlier I had, sir. Recently, you haven't shown.
No, I sent you the latest one.
Just give me a
This is
moment.
an earlier one, not this. Just check my last mail to you. You will see it in there.
Sure. So maybe we just missed out on the latest one. I would request if it's possible for you to forward, I'll just share it.
Yeah. Just give me 1 minute.
Yeah. I would request the participants just to bear with us for 1 second.
The slideshow mode now.
Sure.
Yeah, excellent. We can go to slide 1. So I wanted to start by telling you why, in fact, this whole law came into being. When you understand the rationale for it, then perhaps it will make more sense, and it will enable us also to connect more closely with the feeling for the law. Many people asked me at the time when we were introducing the law, and the argument was this, that many corporates have actually been doing CSR for a long time. Many people have been doing philanthropy for a long time. Giving to the poor is part of our Indian tradition, goes back many hundreds, if not thousands of years. So, why is it that we should have a law on CSR? What sense does it make to have a section in the law and then have rules which govern the whole system of CSR? And I think the rationale for it are principally 3 or 4, which I've tried to cover here. That it is true that although corporates have been doing CSR for a long time, not everyone has been doing it. Those who have been doing it have perhaps not been doing it in a clearly strategic and open manner. So what we wanted to try and do is to bring corporates into the inclusive development agenda of the nation. The question is often asked, whose responsibility are the poor? Is government alone the responsibility uh, or responsible for the poor? Companies often say we earn profits, we pay taxes. With those taxes, government's responsibility is to look after the poor, not ours. Now, that mindset operated for quite some time, particularly in the late 80s and at the turn of the century. But I think pretty much now it's widely acknowledged that corporates too have a responsibility for the poor. One of the ways in which this becomes clear is to say that corporates have to do something for that very society from which they earn their profits. It is up to them to give back to that very society from which they earn their profits. And so the idea was to create this inclusive growth framework in which corporates could be encouraged to contribute to social development by deploying a small part of their profits. And you will come to this very soon. How much of the part should it be? Should it be 1%, 3%, 5%? What kind of a connect should we have? Next slide, please. Now, a few points here that one took into consideration while we were framing the law, and that was that government, yes, does or should do for the poor. There are many, many schemes in which government does that. But the private sector has several advantages. The efficiencies, the flexibility, the quick reactive time that you have in the private sector allows them to operate in a way in which funds would reach the poor quicker and perhaps in a more transparent way. In government, we often have this last mile problem of monies being released but not reaching the poor. Rajiv Gandhi famously had said that barely about 20% of the funds released get to the poor. Here we were hoping that when private sector comes into play, they will ensure that the money that they spend on CSR actually reaches beneficiaries. We also know that the private sector can bring in innovation. Government is typically slow in that sphere. They go by precedents. Generally, in government, we do what has been done before. Innovation takes a long time to introduce in government. But in the private sector, innovation, new thinking, out of the box approaches, these are addressed much more quickly. And therefore, we felt that the whole CSR sector would be benefited by the inclusion of the private sector. The third bullet is actually what is known as a Chatterjeeism, which is that we took CSR from the back room to the boardroom. And what do we mean by that? What we mean by that is this, that earlier on, CSR in companies was more something that was addressed in an ad hoc manner. It was usually done by family, other wives or spouses or other people in the system. It was done off and on. It was done in an intermittent ad hoc manner. There was no structured approach to doing CSR. All decisions on CSR, therefore, were usually promoters' decisions, informal decisions, family decisions, but the decision making was not brought to the boardroom of a company. Very rarely did board members have CSR on their agenda. And the idea here, therefore, was that we would take it away from something that was also done to something that becomes a mainline activity in the corporate system. Also, we felt that if something was being done by a company, it was a board-driven agenda, then there would be greater result orientation. There would be greater planning, and people would address their minds to what should we do with the CSR money? How should we spend it most effectively? And what better place than do it in the board, because the best minds of the company are in the board. Once CSR decision making is part of a boardroom activity, then it gets addressed. It receives attention of the highest echelons of the leadership. And therefore, it becomes something that becomes board driven, more purposeful, and something that the company takes with greater value and greater seriousness. That basically was the purpose with which this whole idea of CSR was rolled out. Next, please. Now, one of the essentially different features of CSR, something unique that happened in India, was the engagement of civil society. And that was done for a particular reason. The idea was that if we legislated for CSR to be done, then who would do it? It would be unexpected or not possible for corporate executives, corporate employees to step out of the corporate offices, go to the villages, stay there for unlimited periods of time, and start implementing CSR. The idea was not that corporate employees should themselves start doing CSR, but the idea was that corporates should outsource their CSR activities to civil society organizations, who actually are the ones that live and work in the villages. They are the ones who are closest to beneficiaries. They are the ones who are closest to the marginalized, the poor, the deprived sections of the community for whom, in fact, CSR is being taken up. So many asked at the time that why is it that we should be engaged with civil society, NGOs, Section 8 companies? And the answer very simply is this: they are the ones who know the world of communities much better than corporates. They would be the ones who would be best placed to actually carry out CSR activities. We have in India, and you'll be surprised to know, about 3.3 million NGOs. So the question that corporates asked us then was, how can we find these NGOs? Where are they? And the answer was that India is home to the largest number of NGOs in the entire planet. And therefore, of these 33 lakhs, even if 10% of them were really credible NGOs, we would have enough to roll out the entire CSR plan. Conversely, the NGO sector, which had been starved of funds for many decades, would now have an opportunity to get funds from corporates and carry out their activities in a more meaningful way, have greater access to financial and other resources, and they would be able to conduct their programs at the grassroots level with much greater capacity and much greater ability. So over a period of time, and you will see that we started the entire CSR journey on the 1st of April 2014. 1st of April 2024, CSR has completed one full decade. And in this decade, I'm happy to say that what we see is that this initial trust deficit between the corporate and the non-profit sector has reduced a great deal. Initially, each were not willing to trust the other. Corporates kept saying that, what is an NGO? They put up a board here today, they take it away, put it somewhere else, and they are just a moving target. And many of the NGOs also started saying that corporates are basically profit oriented. They are people who just look at the bottom line. Unless the legislation is really strong, they will not do anything on CSR. So they were asking government to come out with as harsh a law as possible. So we were being pulled in government in two different directions. One by the corporates who had tremendous resistance to such a law, and one by civil society who said the law must come and it must be harsh and it must ensure that corporates must do their bit for society and for the planet. In the midst of all of this, the CSR law was brought into operation. That's broadly the background. Next, please. So, what is being said here is that in the end, it turned out to be a win-win for all concerned. On the one hand, it synergized the energies and resources of corporates and civil society. It enabled government to play the role of being at the very top as a facilitator, ensure that it became part of government policy. It became a place where government acted as an enabler. Many said at the time, and this is what Mr. Mitra also referred to in his opening remarks, what kind of law should it be? When we were rolling this out way back in 2011-12, when it was on the drawing board, we were writing the law. Because of the pressures from both directions, we had to come up with a compromise. And I still remember that we searched the United Nations websites for quite a long time before we found a principle. The chairman of the Parliamentary Committee on CSR, Mr. Sinha, ex-finance minister of India, he asked me to say that if you have a law, what should be the principle we should apply for the compliance part? Should it be a harshly penal law? Should it be a law with no teeth? What can we do when we roll out this law? And we adopted this principle of comply or explain from the United Nations, which meant that either you comply with the law as it is, or in your website before the public, say why you could not comply. Government didn't say whether that reason should be this or that or X or Y. Any explanation was fine, so long as you did explain. And in the early years, we saw that most of the explanations were of this variety. The law is new, we have not studied it well, we are not able to understand its implications, we are not equipped to handle this kind of a law, we have not done it before, we are getting used to it. These kinds of explanations started coming on the websites, which is fine. And we said, all right, it is a new law. And the idea is for corporates to accept the law. So even if for the first 1 or 2 years, the reluctance is evident, but you can't go on giving the same explanation year after year. So one day that explanation will no longer hold good. And because these explanations had to be endorsed by the board of the company, there was this feeling that boards themselves would realize that offering this kind of explanation cannot go on forever. End of the day, we have to get down to the brass tacks and start complying with the law. So this principle remained in force for quite a long time. And subsequently, in my slides, I will explain to you when that framework started changing. We also put it to corporates. And now, of course, when corporates accept CSR today, no longer as a challenge, but as an opportunity, that when you do CSR, you can draw from it as much brand value as you want. Because you are doing CSR, you are allowed to say that you are doing it. You are allowed to bring to the notice of your stakeholders, whether they are your customers, whether they are your shareholders, with other stakeholders. The whole brand building and the reputational enhancement of the company that comes through good CSR could be utilized by the corporate as something of great importance to them. It also allowed civil society, which for a long time had been saying that we are not getting a chance to adequately show to the world what we can do. What are the enormous changes at the grassroots level that we can actually bring about? If we have the wherewithal and the resources, we who work with communities can change and transform the lives of the poorest of the poor. We need to be given the scope, the opportunity, the wherewithal to be able to make that happen. If we get that, we can really show to the outside world that changes to the lives of the poor can be actually brought about. And finally, this is something that all of you who are listening in today, please remember that the CSR law has been brought in not to help the middle class or the richer class or the better off. It is a law aimed at and completely meant for the deprived, the marginalized, the poor, the disadvantaged, the voiceless, those in society who need help. The spirit of the law is precisely this. And you, as accountants or auditors, when you start looking at the way money has been spent, keep in mind the last beneficiary. If this money is being spent on a project, who is the beneficiary? And therefore, let's say you open a hospital in Malabar Hill, you can't say that it is CSR. It may serve some poor, but largely it would be for the middle class and the richer sections of the community. And therefore, to pass off by saying, no, no, it's a health project, it benefits health generally, this will not do. The litmus test, Gandhi used to often say this, the litmus test is whether it is aimed for the last man standing. It is for the really poor that we are doing this whole CSR enterprise. So that focus should never be lost. Next, please. I wanted to use a visual model for all of you to be clear in your minds as to what Indian CSR is like. This is an Indian law made for India, by India, in India. Nowhere in the world does a similar law exist, except in one country to which I will come much later. But the Indian law has several unique features. And whenever you think of Indian CSR, visualize this one triangle or pyramid in your mind. Government sitting at the apex of this pyramid as the facilitator, the regulator, the lawmaker, the rule maker. And on either side of the base, one, you have the corporate entity, which funds, provides the financial resources, it monitors how exactly the project is going on, intervenes at times when the monitoring shows up that there are lacunae or there are slippages or there are time or cost overruns. And then at the end of this project, the corporate also evaluates to understand how and where that money was spent, Was it spent effectively? Was it spent in a manner in which it was intended to benefit people? How did it work? And on the extreme right of this triangle or pyramid is the implementation agency, that NGO, that civil society organization, that Section 8 company, whom we call the implementing agency. So this triangle or pyramid is a representational diagram which will always in your mind clarify whenever you are in doubt. Please think of this pyramid, this triangle, which will help you visualize what Indian CSR is all about. Next, please. Now I will get to section 135 itself. It is possible that many of you are already familiar, but I will read it to you in a different way so that from the angle of the title of my talk to you today, which looks at organizational challenges and limitations, where exactly do organizational challenges stem from? Where in the law itself are these challenges created? And you, as chartered accountants, will see very clearly that right from here, the law itself mandates certain very, very important things. And for the organization, it is very, very important to understand what that mandate is. If the mandate itself is not properly understood with all its nuances, then frequently you will get it wrong. So the first part clarifies that which company is to do CSR. Are all companies to do CSR? Is every listed company to do CSR? Who are the ones who are supposed to be doing this? And this is what we came up with, that if a company qualifies under any one of these criteria, then it is attracted by the law. And we tried to make this arithmetic quite easy to follow. So we put it as 5, 500, and 1,000. So if you have 500 crores of net worth, you have 1,000 crores of turnover, and you will come to the other criteria of 5 crores of profit for 3 consecutive years, then only you need to do CSR. But this is not and. This is or. Therefore, if a company attracts any one of the 3 criteria, 5, 500, or 1,000, then it shall fall under the ambit of the law. And if such a company which falls under the law, then it must have a CSR committee of the board. This is what section 135, the first one says, that if you do come under this criteria, you must have a CSR committee of the board. And it is not enough that such a CSR committee should exist, but also that it should be or it should have at least one independent director. This makes the role of the independent director in a company sitting on the CSR committee really crucial. The reason for doing this also was that if there was any pressure on the company that please spend the money here or there, or if there were recommendations coming in from different pressure groups, then the independent director would be best equipped to handle these pressures. So that's why you have section 135(1). Corollary to that is section 135(2), which says that the composition of this CSR committee must be displayed in the board's report. Subsequently, also, we made it to be shown on the company's website. So as part of the accountability and part of transparency, it begins right here. In the end, where does the buck stop? The buck for CSR compliance stops here with the CSR committee its chairman, and its members of the board. And in terms of its transparency, who are these members? This also needs to be indicated on not only just the board's report today, but also on the website so that the public at large is aware who are the members of that committee who are taking these decisions. And for auditors and accountants, the identity of these people becomes very clear. Right, next, please. This is the percentage of profit, popularly known as POP, not plaster of Paris, but percentage of profit. This is the second or third unique item of the law in India. This principle has never been used anywhere in the world. These were unique features which I, for one, who was leading the entire CSR movement, brought to the whole game of CSR. The involvement of NGOs, board responsibility, 2% of profits, all of these were unique items in our CSR law, which stand apart and which make it such a very potent weapon by which to do CSR. So we said 2%, and you can read it on your screens now. Many asked, why 2%? Why not 1 or 3 or 10 or 20 or whatever? The idea then came about like this. First of all, we don't expect loss-making companies to be doing CSR. If you yourself have no financial resources, how will you help others? So first of all, you must make profits. Not again small profits, but adequate profits that enable you to help the community at large. From those profits, you should spend a small amount for your CSR, meaning that this is a threshold limit. You can, of course, spend as much as you want. There is no upper limit, but it says at least. And therefore, this debate went on in the parliamentary committee. When we rolled out, we had a lot of stakeholder discussions. We asked the NGOs, we asked society at large, we asked the corporates. Many said 1%, many said 3%, some said 5%, and so on and so forth. But it seemed to us that the consensus veered around to 2% while we were making the law, and we made it. And I think today it has stood the test of time. Everywhere this 2% is recognized as the threshold limit. There is no controversy or any counterclaim on this 2%. Next, please. Now, this is something which is important for all chartered accountants to know. If you look at the law and the rules, and you can read them any number of times, you will find no definition of CSR anywhere, either in the Act or in the rules. And many asked me, as you well might, that Dr. Chatterjee, you are asking corporate India to do CSR. Where have you defined CSR? If in a law you say that you should not commit rape and rape is punishable, then the law also defines rape so that both parties are able to say whether an act constitutes rape or it does not. And there's a clear definition of it. But here in CSR, when you are complying, there is no definition. So have I committed any offense or have I not? How do I know that? And so here again, the litmus test, the principle that all of you should know is this. If the activity chosen falls within the ambit of Schedule 7, then it is CSR. If that activity does not fall within the ambit of Schedule 7, it is not CSR. And therefore, at the very beginning of Schedule 7, we start with the word activities. Of course, this list you can read by yourself, so I will not read it out to you. But Schedule 7 is more or less the Bible of CSR. If it is here, then it is CSR. If it is not here, it is not CSR. That makes it quite easy for accountants and auditors to be able to clearly identify an activity for it being CSR or not being CSR. Now, this Schedule 7 has, of course, been expanded over time. After the change of government in May of 2014, the new government under Prime Minister Modi also added 2 or 3 more items to Schedule 7. So, Seema, you can just go forward by a couple of slides, showing up each one for just a few seconds to enable easy reading. These two last parts, the 11 and 12, and subsequently 13, which deals about natural calamities, were added by the Modi government after it came into power. So, Swachh Mission and the Clean Ganga campaign, these were all added to Schedule 7 after the original Schedule 7 was passed. Now, this is the important part. A small part of it is now being changed, to which I'll draw your attention. But more or less, everything else has remained the same. And towards the very end of my presentation today, I will also see and tell you what Mr. Mitra said, how we moved from a comply or explain regime to a regime of penalties. So you can see here that if a company does contravene the provisions, then what is the fine to the company? And then what is the fine to the officers of the company? Both are punishable, officers and the company itself. The only provision that has recently been removed is the word imprisonment. That imprisonment part has remained, but the financial penalties has been taken away. The financial penalties have been retained. This is the essence of the law as it stands today. Next, please. Now let's get into what you might call the essence of the implementation, where you should look at it very clearly to understand what CSR is meant to be, what companies should be doing, how is it that greenwashing, as it is popular known, can be taken aside and real serious implementation can be done. Here again is an important thing. I said if that activity is not in Schedule 7, it is not CSR. Similarly, if the CSR activity is not a project, then also it is not CSR. Every CSR activity must be a project. And then that follows the question, what then is a project? And for simplicity's sake, I have shown here in this slide and the next what exactly is meant by the project mode approach. So when somebody tells you that we have spent 1 crore on this particular activity, you need to ask the question, all right, let me begin. Did you do a baseline survey? Did you prepare a detailed project report? Has there been a documentation from the beginning of the project to the end? Has there been a start date and an end date? Have you exited from that project? Yes or no? What has been the amount allocated to the project? What is the allocation in the current year? So, if it is a 3-year project, what has been the allocation on a yearly basis? If it is shorter than 1 year, then what has been the allocation in the current year? So, the essence of CSR is to say that if you go to a community or a village or an area, a geographical area, what is it that the company needs to be doing there? Should the company take that call on its own, send somebody there and find out, okay, there's no school, so let's build a school, or find that there is no hospital, so let's build a hospital, or the roads are not good, so let's do some rural development? Is that call to be taken in this ad hoc manner? Or is there a more scientific approach? What do the villagers, what does the community, what do they really want? What are the actual requirements? So, this baseline survey is also called needs assessment. Once those needs have been prioritized, the selection of the project is based, or the selection of the project, the decision is taken on the results that come up during the conduct of the needs assessment study or the baseline survey. When that is done, then needs can be identified and the project can be formulated. Next, please. Now we move to the question that if you decide that this is the geography, this is the place, and this is the thematic, that is, I want to spend so much of money in, let's say, block ABC or Tehsil XYZ or district, GHF, whatever you choose, whichever geography you choose, then who should actually take up the project? Who should do it on the ground? And here the selection of the implementing agency becomes crucial to the conduct of that project. And it is then for the company to decide what is the manner and mode of selection, how do they select. I just want to make it clear to those of you who are listening to me today that the selection of the implementing agency is necessarily not a tendering process. The company is not buying furniture or buying computers. And many companies make this mistake of going for the L1 process. Most companies have come to the conclusion that good implementing agencies are not selected by an L1 process. So long as the process is well documented, the auditor can accept that process. Mostly, for example, recently when I was CEO of the Anil Agarwal Foundation, instead of using L1, we use the process of V1, which means in terms of value, who is offering us the best. And the value included the track record, it included the modus operandi, it included the manner in which the money would be spent, the technical expertise that was available to the company, the track record that they had, the reputation that they had, factors which included, of course, the financial part, but also many other factors that helped us in selecting the agency. And again, usually this decision was not taken by a single individual. We had a committee before which the shortlisted NGOs would come up. They would present their proposals. The committee would make an informed choice, well documented, in choosing the implementing agency. And we found that this was a far, far better way than just going by an L1 process. So, for you who are auditors or accountants, please see how this implementing agency selection was done, so long as it is transparent and open and brings the best possible agency into the picture, then it ensures that the project itself is done well. Then comes this aspect of release of funds. The typical methodology, and most of you who are accountants would know this, because this is a spending law, all of it is based on utilization certificates. So when a corporate gives money to an implementing agency, it usually releases this in tranches, in installments. Typically, these are 50% as a startup, then 40%, then 10% on completion. Whatever be the release mechanism, have the utilization certificates been submitted in time? Do they cover that particular tranche? And has it been done in the time limit that was earmarked for that purpose? The next most important part is how effectively is the monitoring of the project done. This is crucial to the success of implementation. If the monitoring is loose, if the monitoring is inconsistent, the project often goes haywire. There are time overruns, there are cost overruns, there is underperformance, there is difficulty in the whole implementation process. So, is the CSR head, does he have a very robust mechanism for monitoring? Are the reports and returns coming in from the implementing agencies and your oversight team, your CSR team? Are they getting reports and returns in time so that wherever there are slippages, you can intervene and set them right? Today, many of the leading companies have brought in digitization and artificial intelligence into the monitoring process so that real-time data is available to the CSR operational team as to which project is actually unfolding in what manner. And finally, I think this is again a very, very vitally important part. Can we do some sort of a concurrent evaluation if the project, particularly if it's a long project, it's 1 year or 2 years or 3 years, can we have a midterm evaluation so that we understand that so far have things gone well or not so well, are corrections required? But of course, the most important part is the final impact assessment. So has our money been spent well? Has it been spent in realizing our original objectives? Have our spending, have they transformed the lives of those beneficiaries who were the intended beneficiaries? Is that impact sustainable? Is that impact something that will last for some time? Has it really brought in a lasting impact on the ground? These are the questions that that impact assessment must tell us. As to where or whether that impact assessment should be conducted internally, which means by the company itself, or again, should it be outsourced to specialists in impact assessment so that you get an objective third party view? Because slapping yourself on the back or writing your own report card does you really no credit. So I thought I would mention this to you particularly because the lens from which you must view any one of the CSR projects that you choose or pick up to decide, or maybe as part of your sample testing, you pick up one of the programs or projects and decide to test it, then these are the aspects that you must bring, and these are the questions that you must ask of the CSR team in terms of the activity or project that they carried out. Right, next. Now, just to give you some idea of where we are today, having done CSR for 10 years, where does the country stand today? When you have this helicopter view, this idea, and you can, of course, go to the MCA website and check it out for yourselves. Unfortunately, the data still for 22-23 has not been updated. I hope it will be updated anytime today. But just to give you some bit of a contrasting picture, when we began this activity 2014-15, there were barely about 9,000 companies, 8 or 9,000 companies who were doing CSR. Today, I won't say today, but the results for 21-22 show that, let's say, 2 years back, the number doubled. It went from around 9,000 to 18,623. The spending in the early days, again, Mr. Mitra was referring to the years 14, 15, and 15, 16, and so on. The spending was around maybe 8,000 crores, 7,000 crores. Look at where we are today, almost 26, 27,000 crores of spending. So it has tripled. The spending has tripled. The number of companies has doubled. The number of schemes, well, actually, there should be projects as an all-time high of around 42,400 projects running across the whole country. So what CSR has really done is that over time, it has become almost a pillar of the economy. The spending is considerable. And in that sense, it is provided livelihoods to vast numbers of people. People have found their careers in CSR. Today, in companies like Vedanta, the chief of CSR is one below board and likely to become one of the line executives on the board of the company. So, people's careers, which began 10 years back, have really taken off. CSR heads today are prized and looked up to in a company. It's a vertical which is highly respected, and the profession itself has grown by leaps and bounds. Today, as you are CAs, so also now there are CSR professionals. They are recruited as CSR professionals. They grow in the company as CSR professionals. And it is a profession which does many people proud as I speak to you today. And, as somebody who generated the whole CSR movement, it makes me feel extremely proud. Next, please. Now, these figures also are somewhat dated, but more or less the ranking hasn't changed. And you find that these were the top spending companies. Only the spending has increased greatly. Last I heard, Reliance Industries had spent a little over 1,200 crores. And in the current year, HDFC will exceed Reliance Industries. It will go to about 1,600 crores. Then, of course, Tata Consultancy, ONGC, NTPC, Infosys, ITC, NMDC, Indian Oil Corporation, ICICI Bank. Now, again, let's see here. We have one, two, three, four. Four of these are public sector companies. So, public sector companies are also playing a very, very important role in CSR. Some of you may know that CSR actually began in the public sector. When I was secretary in the Department of Public Enterprises, I wrote the first ever guidelines on CSR, and they became effective for public sector companies from the 1st of April 2010. In short, CSR in the public sector actually began 4 years prior to CSR in the private sector. That's just for you to know. Right. Next. This is a revelation. And when we talk of limitations, I'll come to this because there is a serious limitation here. What is that limitation? If you look at this chart, you will see that of these approximately 26,000 crores pan-India, you have Maharashtra spending almost 3 times any other state. And typically, because most of the corporate entities are located in Maharashtra, They have preferred to do their CSR spending in that state. And CSR money is being spent on the most developed states in any case. These are states which are the most developed in India. So you might say that this is a skewed distribution pattern where money, instead of CSR money, instead of going to, let's say, aspirational districts or to less advantaged states or the poorer states like, say, Orissa or Jharkhand or Bihar or the Northeast, these are still being spent on the relatively more developed states. And this seriously is a limitation that needs to be corrected. Government in the Ministry of Corporate Affairs is well aware of this. I have had several discussions with the leadership. What to do? Should we legislate to correct this imbalance? Should we, or on the other hand, should we incentivize corporates to spend their money in the, say, Northeast, for example? Now, the Northeast, all the 8 sisters of the Northeast put together actually get 1% of the total spending in the country. Less than 1%, 0.9. What can we do to incentivize? Shall we provide tax incentives? Shall we provide tax relief? What kind of incentives should we provide to incentivize corporates to come to the Northeast and spend their money there is a question which policymakers are addressing even as we speak today. All right, we will stop here for a bit. If you show us the next slide, please. Yeah. While I do pause here for about 10 minutes or so, Seema, if you can put down some questions that are agitating the minds of our viewers, then in the next section, I will address not only the recent changes in the rules, but also the questions that are put to you. Thank you. We'll take a pause for now.
Sure, sir. In the meantime, I would just request the participants who are attending the session, 4 hours each day for 7 days. We have the best of the faculty in the field of CSR who would be taking the course. We're starting from 12th of September, and this will go till 18th of September, 7 days. We are covering the detailed topics of overview and governing laws, CSR activities and project, policy formulation and CSR project management, CSR reporting, monitoring and evaluation, overview of ratings, taxations and case studies. With respect to this course, you will be required to submit a project report at the end after the completion of this course, and an online examination will be held where we will be also providing you with a certificate for that. So I would request our participants, whoever are interested, please go ahead and join this course. In the meantime, there are certain questions that we have received from our participants, which we would request Dr. Bhaskar Chatterjee to take up once he joins this. In the meantime, I'll just read out the questions for you all. Discipline strategies in HRM way forward for higher education system and implementation. I would request that please, regarding this question, I would request if you could elaborate this question and send it to us. We will take it up with Bhaskar Chatterjee, sir. There are certain questions which have been received, like what are the most common organizational challenges companies face when implementing corporate social responsibility initiatives? How can companies effectively align their CSR strategies with their core business objectives and values? What role does leadership play in driving successful CSR programs, and how can leaders overcome resistance to CSR initiative within their organizations? Another questions we have received is, what role does transparency and communication play in CSR, and how can organization build trust with their stakeholders through these practice? I'm sure the questions which all of you have put in here are definitely the one which you are facing on a daily basis, and you are looking for these things. So I would request Bhaskar sir, whenever he joins in 2 to 3 minutes time, to take up this question. I have also received regarding, is the expense incurred on selection of implementing agency by the company to be considered as a part of CSR expense? Another one is, CSR expenditure should be done on whole country basis. Can it be statewide? Whether giving laptops to families of police staff will qualify for CSR spending. As you're all aware, most of the activities are listed in Schedule 7 of the Companies Act. Apart from that, as initially our chairman, Sir Dr. Debashish Mitra, has mentioned, that we have come up with publications on CSR, which are available in hard copy as well as in soft copy on ICAI website. I would request majorly all of your questions could be answered in the, our publications which are available there. Oh, okay. One of them, our member have asked, one of the participant has asked, can non-chartered accountants join the course? I would like to mention this course is specifically designed for chartered accountants. So currently, only chartered accountants can take up this course. I would also share the screen where we have posted our publications, and our members can have a look there. And with regards to the course, we also send a background material. We have specifically designed this background material only for the participant of this course, which is given to them on the first day of the course itself. So here is the publications where you will be able to find all the publications related to CSR. We have technical guide on accounting of CSR fund by third parties. This publication was released in February 2021. We have handbook on audit of CSR activities. We have handbook on certification of Form CSR 1. So any of our members who are interested in these publications can drop us a mail at clcgc@icai.in. In case you want a soft copy of this, and in case you want a hard copy, you can order it through our publication department. We'll just take a quick 5 minutes break and we'll reassemble in 5 minutes. Thank you. Visible now.
Yes, this is where we were. Right. So we will begin where we left off. I am still looking at those questions and they are right in front of me. Many of those questions are being answered as I speak. So you will find, for example, transparency and communication. Where does the transparency come in? I've been stressing this from the beginning. What you need to do by way of disclosure, what you need to do by way of disclosing the composition of the CSR committee, how can decisions be taken in the most transparent way possible. I've also talked about accountability at each stage. Where does the buck stop? Who is responsible when things go wrong? Who should answer to the notices which are sent by the Ministry of Corporate Affairs? The company secretary, obviously, but then the CSR committee members and their chairman must be involved with the company secretary to ensure that the compliances and the notices are answered in a completely transparent and composite manner. Most of the other questions that I see here navigate cultural and regional differences. These are not that important for chartered accountants or auditors. Um, of course, how can organizations measure the impact? I'm going to come to that in a minute. In a minute, what role does leadership play? Right from the beginning, I have mentioned to you how decisions are now taken at the board level. The leadership of the company, it's pretty much a top down, a leadership driven initiative. CSR is about how much the leadership plays its role correctly with authenticity, with conviction, and that is what drives the culture of CSR through the entire company. So when I sit as a CSR committee chairman, when I report to the board, there are signals that I send out. And those are the signals that actually work across the entire organization as to the importance and the value that we put for CSR. When the deliberations on CSR happen at the highest level, approvals are done at the highest level, the company itself accords a great deal of importance. In the last AGM that I attended, my chairman, while speaking to all the shareholders, he gave an address of about 20 minutes, and about 4 to 5 minutes was on CSR alone. And you can see from there that when the chairman of the company uh, accords that kind of importance to CSR, it resonates across the entire space that the company occupies. In terms of organizational challenges, now in the last part, when I refer to recent changes, you will see that within the organization, there are several challenges that you need to address. And those challenges actually come in a way that we can help when the rules are clear to us. Those organizational challenges about, for example, what if you underspend? What if you overspend? What if you don't spend? What if you wrongly spend? Who should be actually spending? Are you doing enough to ensure that what you are spending is done correctly? Are you monitoring well? These are these specific organizational challenges that play out on a day-to-day basis. And although I've spent quite a lot of time on that, but now in this last part, you will see that I'll be addressing the organizational challenges head on. As to this last question about how do the expenses incurred by the company itself, does that become part of CSR or not? That also will get addressed in this last part when I bring you to the recent changes in the rules. Now, the date on which this happened, the recent changes that happened, were in the circular of January 22nd, 2021, and the new rules became effective from that very date. Now, it clarified a few things very clearly, and from the accounting and auditing point of view, this is particularly important. Who can take up CSR activity on the ground? Who is the implementation agency, or more accurately, who are implementing agencies? Who can they be? So it says the CSR activities can be undertaken by the company itself. What does that mean? It means that sometimes, for example, you want to construct a toilet complex in a school. You may want to give this work not to an NGO, but to a contractor. And in that case, you do a tendering mechanism, you appoint a contractor, the contractor constructs the toilet complex in the school and moves on. Now, this part is done by the company itself because it conducts the tendering process, appointment of the contractor, etc. That part of it is done by the company itself. So this is what they mean. But other than that, you have a Section 8 company, a registered public trust, a registered society. These are the only four forms in which or organizations which can do implementation. A company under Section 8, a trust, a society, or the company itself. These are the only four ways in which CSR monies can be spent. Now, there are also opportunities where spending can be done in partnership with another company. For example, if Asian Paints wants to combine with Tech Mahindra on a school project, they are most welcome to do so. Sometimes you are also enabled to contribute to certain funds set up by the central or the state government. For example, as I showed you in Schedule 7, the Clean Ganga Fund or the Swachh Bharat Abhiyan, there are certain specified items in Schedule 7 to which the company can contribute. What is important here, though, is the second last bullet in this slide, which is that any of the entities, that is a Section 8 company or a trust or a society, must have at least 3 years of track record. If you find that any of the implementing agencies chosen by the company does not have a record of at least 3 years, then you must flag that item. Finally, of course, if there's an act of parliament or a state, that's different. But as of now, this is what the rules specify. Next, please. Just as you know what is CSR, and I explained to you that there should be activities contained in Schedule 7, it is important for you also to know what CSR is not. And these are the 6 activities which have been explicitly excluded to qualify as CSR. And let me sort of quickly run through them. And some of them may be a little difficult to understand, so I'll explain them. Activities undertaken in the normal course of business. This needs explanation, so I'll come back to it. Activities benefiting employees of the company itself. Therefore, any activity which benefits your own employees, like improving the quality of meals in your canteen, cannot be considered a CSR activity. Those activities which are undertaken outside India, except this one activity, is also excluded. Political party funding is out. Sponsorship or marketing of your own products is out. Samsung marketing or selling its own TVs will not do. And this last part, fulfillment of obligations under any other law in force in India or activities which fulfill a statutory obligation. This also needs some explanation, so I will make it clear. As accountants and auditors, the first and the last are very, very important for you to understand completely. What does this mean? Activities undertaken in the normal course of business. Example, Rural Electrification Corporation. What does it do in the normal course of its business? It connects the last hut in the last village to an electrical line. It lights a bulb in the last house, in the last hut, in the last village of a community. Now, you might say this is CSR. Ultimately, it is improving the lives of the very poor. But this is what RSC has been set up to do. This is what it does. This is what it is tasked with. Therefore, providing electricity to rural houses will not be construed as a CSR activity or REC. Similarly, if you go to number 6, let's say that you have a factory and that factory is emitting effluents which are toxic into the nearby agricultural fields and spoiling the cropping pattern there. So you receive a notice from the Pollution Control Board, and in order to comply with the requirements, you construct a purification plant. And thereby, the water that you release into the agricultural fields is no longer toxic or poisonous. Now, is the construction of the plant, the amount that you incur, let's say 5 crores, is that a CSR activity? Now, under the law, it will no longer be, because you are here complying with something that the Pollution Control Board has asked you to do. So mere compliance with law will not be covered under CSR. This must be very clear to each one of you. Next. Next, please. Now, these were some loopholes in the law which have now been plugged. So if you spend more than what you were expected to do, that is more than 2%, you have 2 options. Remember that the law says at least 2%. So if you have spent more, fine. MCA is fine with that. So is everyone else. But you also have the option that instead of 5 crores, you spend 6 crores. Then this additional 1 crore, you can set off against next year's spending, which means that next year, instead of spending 5 crores, you can spend 1 crore less, that is 4 crores. So this is known as the set-off rule, which allows the excess amount to be set off against the budget for the next year. The other thing is a treatment of surplus arising out of CSR amount or CSR spend. And this cannot be treated as a part of business profit. Again, you need to understand this very clearly, and let me explain this by way of an example. You have set up a community toilet complex, and let's say it's being run by any agency who's running this complex. This is your CSR activity. You are charging 1 rupee per use so that the toilet is maintained. As a result of this, over the 1 year of the project, you get 1 lakh of rupees as collection of fees. Now, what are you to do with this 1 lakh? You cannot treat it as part of business profit. But what you can do is either transfer it to the unspent CSR account, or you can plow it back into the project. You have both these options, but you cannot treat it as a business profit. Next, please. I had mentioned to you, and again, this is part of the organizational challenge, that what should you do with impact assessment? And the rules are now very clear that whenever there is a project whose value is more than 1 crore, whose outlay has been specified very clearly, is more than 1 crore, then you have to undertake an independent third-party impact assessment. And this has to be completed not less than 1 year before undertaking the impact study. Next, please. Now, in the course of your CSR spending, if you have created a capital asset, for example, you have built a community hall or a school building, when you exit the project, what do you do with that building? Now, under the new law, you can hand it over to a registered trust or a registered society or to a self-help group or to a public authority which has been defined under the Concerned Act. For example, you can hand it over to the panchayat. Another important rule change is when the CSR obligation, the 2% obligation of a company, is less than 50 lakhs, it does not have to have a CSR committee. And finally, of course, that international organizations like, say, UNICEF or UNDP, they cannot act as implementing agencies. Next, please. The CSR committee now has to ensure that all the projects are listed in the CSR policy. This is an annual action plan, has to be evolved by the CSR committee, and it has to be placed on the website and reported to the board. One question came in as to what can be done with the expenditure that is made by a company on conducting its CSR activities. And here under Rule 7, it says that you can spend up to 5% of the total CSR budget for the expenses incurred by the company itself. The other aspect, of course, is apart from the penalty, you still have to explain why you did not spend the 2% in case you spent less than 2%. So now you must also not only explain, which you have to do in any case, but also pay penalty, to which I will now come. Next, please. Now, again, organizational challenges. So this is the disclosure and board responsibilities. Pretty much in one slide, you will find that the organizational challenges are addressed here. So the annual report, the website disclosure, responsibilities of the board, the responsibility assigned to the CFO, the monitoring, implementation. I have put all of this together in one slide so that for accountants and auditors, it becomes easy for you to refer to this one slide in which you will get all the information that you need. I will not run or read through it. It's there for you. You can read it and use it whenever you want to. Next, please. Finally, and I'll close with this, these are the current penal provisions. Again, I will not take up your time by reading through it, but you can see that in one slide, I have captured the entire penal provisions. And the amounts you can see are considerable. A company's default can run up to 1 crore. An officer can go up to 2 lakhs or 1/10 of the amount required to be transferred by the company. So the penal provisions today are pretty steep. And that is why whenever there are issues of non-compliance, they are treated very, very seriously by a company, not only because of reputational loss, but because of the financial implications. Next, please. This is the same one. Next one, please. I think there is a slide on. Yeah. Now, what I have done here is that I have given you the transition. And this is the last slide. Again, you can read at leisure, but I have put it in one slide for you to refer to it at a glance. This was the provision earlier, comply or explain, which meant no penalty to the company, disclosure, no penalty for officers. Then from there, we moved to comply or pay. And then there was 50,000 and 25 lakhs to the company. And for officers in default, it was imprisonment and fine from 50,000 to 5 lakhs. And finally, now we have moved to comply or pay penalty. And the penalty has again been specified going up to 1 crore. And then officers in default, again specified in that rectangle, penalty of 1/10 of the amount or 2 lakhs, whichever is lower. So you can see that right from comply or explain to comply or pay penalty, the regime today has completely changed. Thank you. Last slide, please. Well, it's been great spending this time with all of you. I hope I have been able to address your questions and your queries. If there are still some left in your mind, don't hesitate to send them to Seema, and I will be happy to answer them over a mail to her whenever that is possible. Thank you, Seema. Thank you, everybody. All the best from my side.
Thank you so much, sir. As we are running out of time, so most of the questions that we have shared with you already, which have been received, you have already covered that. And at this point of time, I would request all the participants, in case you have any questions pertaining to the seminar, please send us to clcgc@icai.in. We'll connect with sir and definitely try to answer each of your queries. I would now request Nisha ma'am to please extend a vote of thanks to you. It has been a wonderful session, sir, and we are privileged to have you as a speaker for this seminar, sir. Over to Nisha ma'am.
Thank you.
Thank you, sir. It was really a great session covering a various relevant and important aspect related to the CSR, which is very much requirement of the understanding today's corporate scenario. And I thank you to our viewers also, and we find that they have find this today's webinar in real sense both enlightening as well as inspiring too. So, sir, it was really a great learning with you, and thank you to all my CLCGC team as well as the technical team and all viewers who have taken such an interest has been listening to the webinar. So you can say ki with this so wholeheartedly, And that way, thank to you, sir, and thank you to everybody, and thanks a lot.
Right. Goodbye. Good luck.
Thank you, sir.
Yes,
हाँ भैया।
session over.
Recording stopped.